Let's bring in Ed Moya, Chief Market Strategist at Oanda. We're talking about all things that are going on in the market, particularly oil, as we're seeing oil surge, Brent in particular, the most, in history on the heels of this attack in Saudi Arabia. So what are we seeing and how much digestion time do we need?
I think we're seeing an historic day, really, when we take a look at this price action. We had the biggest disruption to world oil supplies on record. We had at one point Brent was up over 20%.
Yeah.
And this is a bigger reaction than during the Iran Revolution, the invasion of Kuwait, the Arab-Israel war. So this is, historic.
Maybe it's too much. Is it too much of a reaction? I mean, here's a look at a one-day chart. It's pretty wild.
Very much so. And I think when we take a look at what happened was, well, there were a mounting growing of bearish bets. So this basically, closed everyone out.
Right.
And when we take a look at how WTI has been trading over the last 3 months, it's been pretty much stuck between that $50 to $60 range.
All right. So I just want to stop here. Crude oil 14%, Brent crude same. RBOB 13%, heating oil 10%. These are some really big moves today. Let's break it down for some of the stocks because people like to watch the stocks. The two of the best performers in the Dow Jones Industrial Average today, Chevron and Exxon. Mm-hmm. Does that continue, do you think?
Well, when we take a look at how oil has performed over the last year, the sector's been battered. And now you might see a kind of a recirculation. Okay, let's get some more energy exposure because it has been down. I think the S&P was less than 5% exposed to energy. And you're going to probably see some growing demand for that just because it's underperformed and we're so close to record highs that the sector was due to catch up. And if we continue to see some bullishness with oil prices, it's just going to benefit the exploration E&Ps and the drillers.
What kind of names are you talking about?
So I think the giants, we're going to see Exxon be one of the, it's kind of like the one that everyone will want some type of exposure, sure. And then they might venture off to the Occidentals and whatnot. But you will see refiners be under a lot of pressure because Valero is heavily reliant on that Saudi crude. So they're going to have higher costs, and it's going to be a murky outlook for them.
Right, so a disparity between the different types of companies. And OPEC, which was sort of sitting steady, I wonder what happens now. I mean, right now, the U.S. is such a big player as well.
Very much so. And this is going to be very tough for Prince Abdulaziz because he's just taking over pretty much his second week on the job. And now he's going to have to decide, okay, well, let's say it's going to take Aramco a lot longer to get production, back to where it needs to be. Are they going to have other members kind of, let's put this production agreement on hold? And this is going to disrupt a lot of that kind of main backdrop.
I'm also curious about the IPO, too. I mean, that was also a big story as well. There's been some talk that the IPO may be pushed back. When we talk about the names that are on the move, Chesapeake, for example, was up double digits. So I wonder if these moves are ways to get in or get out today. I mean, are there any sort of market moves that you would be making today? Here's a look at Chesapeake. It's up 20%. Murphy Oil, 22%. Weighing Petroleum, 53%. I mean, is that justified?
I think that it was justified to see a rally. I think this is a little bit overextended. I think that right now the longer term outlooks is still going to be modestly bearish for oil. I think, we do have upside right now in the short term.
Right.
We could see a few more days, possibly weeks of higher prices. But when we take a look at this particular disruption, and there's going to be tit for tat retaliations from the U.S. administration and Saudi Arabia and Iran. They're probably going to wouldn't be surprised if we saw tankers under attack or more attempted drone strikes.
And these headlines could really drive the market as well. Do you think this solidifies the Fed cut for 25 basis points? If there was any question, do you think this puts the right in?
It really should. And I think right now there's that argument, well, what is this going to do to inflation? Is it going to be something that the Fed is going to be cautious as far as, well, maybe we shouldn't cut? No, the cut is heavily priced in for many reasons, and you're probably going to see more cuts, I think, this year.
Ed Moya, Chief Market Strategist at Oanda, thank you so much for joining us. A big day on the markets and energy in particular.